Hello, everybody. My name is Sandras Phiri. I'm the CEO and founder of startupcircles.ai, the community that empowers people to launch their startups and fundraise. I'm also the director of Startup Grind Cape Town. I'm so excited to be talking to Silicon Valley entrepreneur and investor Steve Blank. Steve is recognized for developing the customer development method that launched the lean startup movement. He has co founded or has been part of 8 startups, 4 of which went on to become public. He's an adjunct professor at Stanford University, UC Berkeley, and a senior fellow at Columbia University. Steve is known amongst entrepreneurs and students as one of the godfathers of Silicon Valley. He has been featured in Reuters, the New York Times, Forbes, TechCrunch, and the Wall Street Journal. We're so excited to have him today at Redefine Our Future, the launch of the Shift Fund by Enigma Ventures and StartupCircles.ai. Exciting. Thank you very much for joining us today, Steve. Really excited to have you, and thank you for taking your time to chat with us today.
Thanks for having me. I'm excited.
Great. And I've followed your work and I've read your books. And in 2016 at the Startup Grind Global Conference, I happened to speak the same day after you spoke. I was totally blown away, and later on I got the chance to speak as well. But since then, it's been great reading your books. One of my biggest book, the book that I carry all the time, is the Startup Owner's Manual. And so thank you for joining us today.
Great. Happy to be here.
Thanks. So to begin with, maybe I'd like us to just talk about your definition of a startup, which I totally like, and then the steps that startups would go through to build a company.
Sure. So a startup, if you really think about it, is just a temporary organization designed to search for a repeatable and scalable business model. And it's worth parsing that for a second. I used to think a startup is like a place you bring your dog or your pet, and you get free food, and it's a band of small people who work together, and isn't that exciting? And that's how it's always going to be. Well, no, the goal of a startup is not to be a startup. The goal is ultimately to be a large company. So therefore, that stage called startup is a temporary organization. And it's temporary because early on, you're searching for something. And so what are you searching for? Well, first, let's make sure the definition of search means it's the opposite of execution. In a large company, you come in and have processes and procedures because you do the same thing day to day. In a startup, you're actually searching, and what you're searching for is what we call a repeatable and scalable business model, which is a fancy term for who are our customers, what products do they want, what features do they want, what's the right distribution channel, what's the right pricing, what's whatever. And in fact, the first two things you want to find is that fit between customers and product. There's a special word for that called product market fit.
Yes.
And so product market fit is just a small part of the rest of the business model. First you find that, then you discover all the other things. How do I create demand? And what are my costs? And what partners and activities and resources do I need to do? And so again, back to that definition, a startup is a temporary organization designed to search. And that search is how do we kind of find product market fit in the rest. A repeatable and scalable. Repeatable means if I do something on Monday, I can do the same thing on Wednesday, and it's repeatable. And scalable means if I put $1 in, or a pound in, or a euro in, I get more than that out, whether it's more users or revenue or something else. And business model means kind of all the components that make up a profitable business. So that's the long story for a very short definition of, at least Steve's definition of what a startup is.
Brilliant. And there's some entrepreneurs who are very, very precious about their ideas. And sometimes they don't want to share the ideas, and they're holding on to the idea, and they want to develop in secret and then release What are your thoughts around that? What's your
There are some businesses, like if you're in life sciences, meaning therapeutics, you've developed a drug, which is probably the extreme case, that you don't leave your bedroom without having a patent attorney with you. Um,
hmm
but almost every other business, certainly in web or mobile or hardware, unless you're giving out source code, um, it's less so the idea and more so the discovery about what really is the right idea. You know, the interesting fact, we now have about 75 years of data, is that every founder thinks they're a visionary. But about the data says about 98% of you are only hallucinating. Um,
hmm
and so, and what that means is it doesn't mean you're wrong. It just means your initial vision
hmm
doesn't match what customers need or the market needs and whatever. So so that means if that data is correct, you could throw your business plan on the street and let people pick it up because it's going to be wrong. How you're going to get it right is not your initial insight. It's about that customer discovery and the minimum viable products you build as you iterate and learn and discover. So to specifically answer your question, being in stealth mode because you have a great idea almost always, not always, but almost always limits you more than anybody else. It limits your ability to attract great people. It limits your ability to actually validate and test your idea because you think typically people who go into stealth mode also believe, and here's a real trap for smart founders. They believe we absolutely understand the customer problem or need, and therefore we're not going to talk to anybody. All we're going to do is lock ourselves in the room, hire great people, and build the solution.
hmm
And that's all we need to do. And when you do that, you end up with something like Segway. You
Yes.
remember what Segway was?
Yes. Yes.
Segway was a brilliant technical solution to a problem that didn't exist.
hmm
But it was a perfect stealth mode company. If they would have got out in the building and actually talked to people and showed them prototypes and whatever, they would have discovered the only place that it was useful was shopping malls, for the mall
Yes.
cops going
Exactly.
around, or maybe tourists going around the town. But it was not a, it was that, and that's an extreme example, but it does kind of illustrate that trap. The smarter you are, the harder it is for you to do customer discovery.
Mm.
You kind of think about that and go, well, why? Well, if I'm very smart, I think I understand the problem. Let's get
Yes.
to work.
Yes.
Screw this discovery stuff. Let's
Yes.
just start coding or building hardware.
Mm.
If you're not so smart, you might say, maybe I ought to ask a couple of people. Um, and I was always kind of on the not so smart side, so I would always ask people. And my idea always got better as I kind of tested it and tested different parts of the business model.
Mm.
That was another long answer to a short question.
Yeah, I like that answer, and I think a lot of people struggle with that, especially a lot of
Yes.
founders when they're coming through, they're talking to investors or talking to other people. They think that the initial idea is the answer, is the one that's going to
Right.
make millions, and therefore sometimes they get too set on their method of achieving that, where they
But
decide.
if you think about why that is, I mean,
Mm,
it's true. But remember, the other tension of a founder is a founder of a company, not an employee, but a founder has to create something against all odds,
yes,
right? They have to have vision and persistence and drive when their parents are telling them go back to school or get a real job.
yes,
Investors are telling them this is a stupid idea. No one wants to join their company. So they have to be true believers in their idea. And what lean and customer discovery actually does is set up a little cognitive dissonance. It says, no, 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 you need to believe 120%, but I want to have this little voice in the back of your head that says, but maybe we ought to test it.
yes.
And so that's what's hard about it. Not that getting out of the building is technically hard, but it sets up kind of this dissonance of, well, wait a minute, I need to be a driver as a founder. I need to be pushing to the future. And now you're asking me to kind of question myself.
Mm,
Well, I'm supposed to have no doubts. How does that work?
that's
And
right.
that's what's hard. That's the part that's hard for
Mm.
founders.
And I think also that founders, a lot of times when they're starting out, they call their ideas their babies, and nobody wants to be told your baby is ugly.
Right.
They don't want, they don't want to take
Right.
any feedback from
So,
anybody.
so, Right. And you just brought up a fun point is and I've seen this happen multiple times in small startups is okay, you have this idea, you're the founder, and maybe you kind of heard about this customer discovery stuff and the lean startup stuff. So you send out your VP of sales to kind of
Mhm.
test the idea, right? And so the VP of sales tests the idea and comes back in and tells the founder, you know, uh, everybody thinks it's a stupid idea, or this can't, this no one will buy it. What do you think the founder's first reaction is?
I think the founder will think that you asked the wrong people, the people that you asked don't understand, the people don't get it. And I've heard
You
somebody
get
say, how do I get customers or investors to
right,
understand me? Or the
right.
customers are stupid.
So, you got it. And the typical response is, "You're just not selling it correctly. Go back out
Yes,
again."
exactly.
And so they go out again and they come back again and say, "No, it's no one wants to buy. What do you think the founder says the second time?
We need to spend advertising money.
Or you're fired."
Oh, yes,
Right?
yes, of course.
Now, just run that thought experiment. If you're a founder watching this, imagine you didn't send out the VP of sales. You sent yourself out to talk to those customers.
Mm.
Now, instead of having some proxy you could blame that they're not describing it right, imagine if you were a smart founder and having people tell you your baby's ugly and you would try to turn it upside down to make sure you weren't showing them the wrong end of the baby. Um, if you're a smart founder, you would start asking questions about, well, what would you buy, or
Yeah.
what are your needs, or whatever.
Mm.
And here's the big idea: if it's only founders who, when customers say, well, we would buy it if it looked like this, it's only the founders who could say, well, that's interesting. We are making it just like that. Is the founders are the only ones who could change the company's strategy or product on the fly in front of customers.
Mm.
A VP or an employee has no authority, or even worse, no imagination to do so.
Yeah.
But founders always reinvent the past.
Yes.
That is, oh yeah, I was already thinking of doing that anyway. Um,
Yes.
that's the other value of having founders get feedback front and center to their face, because there's no denying what they're hearing. Does that make sense?
Yes, it does, absolutely. And then again, regarding um, business plans, where the old model was write a business plan. Sometimes you hire experts to write a business plan for you, and you hire marketing agencies to do market research for you and come up with a brilliant document that nobody reads, right? Or
Right.
what are your thoughts on that?
So I just have this shorthand um, that says, no business plan survives first contact with customers, which means, a business plan is a great document that investors make you write that they don't read. Um, and they don't read it. I mean, that's a little extreme, but they're asking you to put together a plan because they didn't know what else to ask you. Um, and I kind of, by the way, most investors still, after 50 years, still ask for a business plan. But actually, what they really want is to understand, how are you going to reduce early stage risk in your company?
Mm,
And so, gee, if you tell me about your 5-year forecast, and you tell me about, your team, and you tell me about the opportunity, maybe magically I believe that will happen. What I believe you need to do instead is, gee, if I talk to 100 customers or partners or regulators, and if I build a series of minimum viable products, that is iterative and incremental prototypes, and put them in front of customers, and then tell an investor, well, here's what I found after 100 interviews, and here's how I pivoted, and here's a whatever, and here's how I reduced early stage risk. To me, that's a lot more effective. And by the way, here's how I tested different parts of my business model, and here's how I have already found product market fit and validated some of the demand creation activities, like getting customers. Um, I think that's a lot more effective than this writing exercise we put people through.
mm,
But at the end of the day, every founder should remember a couple of things. One is, writing business plans. It's the golden rule. That is, he who has the gold makes the rules. Um, and if VCs want to see a business plan, don't come in with a business model. But number two is you could write a business plan if they insist in a way that will blow them away, which says every time you state something, you could say, and based on our 120 interviews, or based on customer feedback of our 6 iterative minimum viable products, or based on our wireframe or whatever. So you could be talking about the language of customer discovery and agile and lean inside of a business plan, but still give them the format that they're comfortable with. But actually, instead of just writing inside your building with, and as you pointed out, using market researchers, you're actually doing the out of the building activities.
Mm.
Does that make sense?
Yes, it does. And over the time you've taught as still teaching at Stanford, UC
Yes.
Berkeley, and Columbia, and slowly I'm seeing that a lot more universities are now adopting your methodologies and your teaching, and there's a large movement using customer discovery and lean. What do you feel some of the things that a lot of people, a lot of entrepreneurs still don't get?
Well, the biggest one is that customer discovery is not talking to 5 to 10 people. Um, it's a continuous process, and just for scale, I teach students, and as you mentioned, in universities who are taking a full course load with other classes, but in a semester or a quarter, they have to talk to 100 to 120 people in 10 weeks. If you're not doing that as a founder, you're not doing customer discovery.
Mm.
Because, or else you'll fall into the trap of optimizing a local maximum rather than having enough data to figure out, is this a signal or is this noise? And by 100 to 120 people, if you're doing something mobile or web, that might be touching thousands of people, virtually, to get some feedback. So trap number one is giving lip service to customer discovery, but not actually doing it.
Mm.
Probably trap number two is the first one I mentioned earlier, and that is, yeah, there's lean stuff, but I truly understand the problem. It really is. Let me start building my machine learning algorithms. And by the way, as I said, the smarter you are, and it's typically I see it more with engineers, but business people as well. But typically engineers go, yeah, that's great, but I need to start building the tech.
Mm.
And yeah, that's fine. But if you're building the tech in a vacuum, you have absolutely no idea if anybody cares. And
Mm.
I've seen multiple examples of people spending months, sometimes years, building something and discovering no one wanted it, or no one wanted, the top 90% of the features
Yes,
that you could have found out within 30 days.
I've seen that, and it's the same process now after looking at, being exposed to your work. That's the same process that we followed at Startup Circles, where have an idea and then you ask people, and by asking people we figured out that actually what we thought was a problem wasn't a problem for them. And then it's a little disconcerting at first and think like, but I thought I figured it out. Then it throws you off thinking, okay, what do we do now? But also exactly what you say, that you keep asking, say, what would you like and what is a pain for you, until we got to a point where somebody said, yes, if you build that, I'll pay you that. And in fact, what they said they'll pay was a lot more than we thought they would actually pay. But I found like
Right. And
also
so,
with
go
me,
ahead.
after doing an MBA, there's like a mismatch. Working in corporate, doing an MBA, there's a mismatch of the process. Whereas
Yes.
previously, if I wrote a small document, I asked lots of people questions, I would be judged on how big my document was. Say, we can't pay you so much money for such a short document based on saying you asked these people and they gave you that. And then whereas the traditional model is you bring smart people, MBAs, and all the super educated people in one room. We discuss what the problem is and we define it. We send it to dev, they develop it. Then a year later, we launch. And if nobody buys, we throw advertising money on it. And if nobody buys, well, we throw even more money. And then 2 years later, we can the project. But this time, at least nobody loses their job. We can spread the blame across all the departments in the company.
Except the thing you missed is the first thing you do is you fire the VP of sales and blame it
Oh
on
yes, at least then
them.
one person gets the full blame.
That's right.
Right.
Um, so one of the things founders need to remember is that as smart as you are, there's no possible way you could be smarter than the collective intelligence of your potential customers. It's a big idea. Assume you are the smartest person in your building. The problem is that you aren't the customer,
Hmm.
right? And so the information you need is actually outside the building. And I want to throw in a caveat that is a little asterisk here about this process.
Yes.
Customer discovery works as we've described when there's an existing market, when there's existing customers, right?
Mm.
But let's say you're Steve Jobs, you're creating something new, or Henry Ford. And the famous line about Henry Ford was, well, if I asked people what they wanted, they would have said a horse with 6 legs. That was the Steve Jobs comment.
Yes.
Um, so what do you do when you're creating something new that never existed? So you can't go ask people, well, what feature do you want? Or they're going to go, I don't even know what this is.
Mm.
Um, and my answer is, you still need to do discovery, but it's a different type of discovery. And you got to make sure you kind of understand, is this a new market or an existing market? And by new is, if you mention the category, the people go, I don't know it. Or the people go, oh yeah, it's just like one of these. If
Okay.
it's a new market, what you want to understand is not the features or speed or whatever. You want to understand someone's day in the life today and figure out what's their day in the life going to be when they use your product or service or whatever you're going to sell.
Okay.
How will it change? And that's very different type of discovery, but it's still discovery. So, Steve Jobs, Henry Ford, Walt Disney were the exceptional people who could actually imagine that based on their own experience outside. The rest of us, unless you think you're Steve Jobs, still, even in a new market where you're creating a new category, need to go be able to answer the question. No, let me tell you how the world will be different. Let me tell you, by the way, if the world's different, are there any other things that need to happen um, around us for that to happen? When the internet first came out, were there other things that, oh yes, I guess we need high bandwidth networks. I guess we need X and Y to make e-commerce or a video chat happen. It wasn't just the app. There was a whole surrounding set of other things that needed to happen.
Yeah.
So does that make sense? I mean,
Yes.
so
Done.
so this I always hear about lean and customer discovery is, oh, it doesn't work for new things. Oh no, it does, but you can't ask the same exact questions you were asking
Mm.
when you have a better version of something that people already understand.
Oh, brilliant. And that brings us now to redefining our future with the global pandemic, COVID-19 pandemic. What do you think? How do you think startups, how should founders respond to this, like now and the world after this? And what are your thoughts? What do you think it will look like? I'd like to
Well, I think the first thing founders need to do is throw their hands up and run around screaming, going, "The world is over!" And then after you get that out of your system, kind of sit down and act like founders. But it's okay to run around and go, "Oh!"
yes, yes.
Because this is the first time ever in the history of capitalism that we've consciously shut down economies, not just in one country,
Mm.
but in every country globally. Um, and I wrote a couple of blog posts about this a month ago, and I said, well, we're not sure this is a 3-month problem or a 1-year problem. Well, I think it's pretty clear this is not a 3-month problem.
That's right.
Um, it's at least a 1-year problem, if we're not careful, meaning countries, to drive the entire world into a massive depression, um, given how interconnected economies are today. Um, and what that means for founders is a couple of things. One is, if you haven't raised money, there's one set of issues. If you have raised money but not cash flow positive, there's another set of issues. And if you're kind of have revenue but not cash flow positive, there's the third. And I'm happy to describe the
Yes,
scenarios
please.
for each one of them.
Yes.
So if you haven't raised money yet, um, you ought to understand that investors are also figuring out what to do.
Mm.
And what's different now than any recession in 2008 or the dot-com crash is that the big funds have billions of dollars. That's the good news.
Okay.
Um, and the bad news is that a good number of them have their most valuable or valued startups were burning a ton of cash at the high end. Let's just take Airbnb.
Mm.
Was worth $38 billion in March 1st and is now worth maybe half of that,
Mm.
April 15th. If I'm an investor, all of a sudden I need to support that company. So maybe, and this is the maybe, is all that VC money going to be going to support their high burn rate but most valuable companies? We don't know yet,
Mm.
right? And so that means that what that means for entrepreneurs are people still going to be investing at the same rate in the same ideas that they were, 2 months ago? And the answer is likely not. What we're already seeing here in the States, I don't know about the rest of the world, is that investors are reevaluating the types of things they want to invest in. They're pulling term sheets, they're decreasing valuations, etc. A good number of them are not investing at all right now to see how it goes. And a very few smart investors, are still looking to the future, knowing that there will be a morning after. And in the downturns is when Google started and Facebook started, and that is, it's not that there won't be any new ideas.
Mm.
So if you're doing a startup, the first thing to ask is, what market segment are you in? If you're in travel, hospitality, restaurant services, or whatever, unless you have a really brilliant idea about how your product or service is going to work in a recovery of a industry that's laying off 80 or 90% of their employees, I would not be doing that startup. Period. End of discussion.
Mm.
If you're in any other space, selling to enterprises, etc., just understand that a lot of enterprises are scaling back, but maybe you could be selling right now or building right now for either companies that are hiring, or figure out why is it your product and service are going to be needed when a recovery does come. Does that make sense?
Yes.
Um, and of course, if you're pivoted in telemedicine or healthcare or anything else, you're in the right spot. And you will, your odds of getting funded have probably gone up. The other thing is to realize that if you're a startup, you're probably going to have to call on 2 to 5 times more investors than you would have had to before. We were in boom times before. Those times are gone now. They're gone at least for the next 3 months, if not for the next year or so, if longer. And so the first thing to ask is, if you still want to be out raising money, and I would not be shy about this, is you want to ask any VCs who will talk to you, are you writing checks now? Not are you taking meetings? Are you writing checks over the web? It's a big idea.
Mm.
A lot of early stage companies will be happy to take meetings, but you don't want a meeting. You want to, ultimately, you want to check. Do
Mm.
they want to meet you personally and they're waiting for this to blow over, or will they write you a check now? And you want to ask them, who have you written checks for since this started? And if they get insulted, that means they're not writing any checks. Does that make sense?
Yeah. Yes, it does. Yes,
And
it does.
should I keep talking, or?
Yes. Yes.
Yeah. So let's say you've raised a seed round, or and now you just have burn rate, but you have no revenue or very little. Your world has just changed, because now your model previously was, well, when we reach milestone X and Y, we'll raise a Series A round, or we'll raise the next round. All bets are off.
Mm.
That's a big idea. All bets are off. Maybe you're in a hot space and that Series A will be there. I don't believe it. I think, just like seed funding, I think Series A is actually going to be in worse shape than seed funding. And so I would be um, doing a couple things. One is, I'd be calculating your burn rate.
Mm.
That is, how many months do I have until I run out of money? And it used to be, it was how many months do I run out of money, but I'll raise the next round after that. I think the the lifeboat strategy now is, what do I need to do to cut my burn rate down, or more importantly, start generating revenue now, not waiting for 3 more months or 6 more months. What is it you could be selling, even if it's buggy and unfinished anything, to start generating some revenue? And I would be cutting that burn rate down um, as much as you can. And I'd be starting to talk early to potential investors to see, are they writing Series A checks? If so, what criteria? What are they looking for? And have they written any in the last couple of weeks? Um, because what you're looking for is, if you're the CEO of a cash flow negative startup, is how much runway do I have? That is, how many months at my current burn rate do I have to live? And you need to get that burn rate down and that runway extended. Are there any lines of credit you could draw? Are there any um, government programs you could get to not have to lay off people? Um, can you defer rent? Can you defer payments to Amazon or payments to someone else, to vendors? Or can you cut salaries so you don't have to lay people off? First thing I suggest to all companies is, number one, you want to um, uh, cut the C-level staff salaries dramatically before you start laying anybody off. And you also want to cut everybody's salary if you could do that, and in exchange for additional stock, because right now cash is king. Does that make sense at all?
Yes, absolutely, absolutely. Great.
That's my 2 cents.
Excellent. Well, I like that. I like that advice to the startups at different phases, and I'm excited because we have Enigma Ventures, who we have on this event. They're launching a fund for companies that are for our positioning for the world after COVID-19. And then also they have one or two companies that have actually got term sheets just during this period of lockdown, because they pivoted very quickly. And like you said, like, it's not waiting to see how things pan out. It's what can I do now, which I think is
And
great.
I just want to remind your viewers that in the old days, that is before March 1st, a term sheet was essentially, we're about to get a check in the bank. Nowadays, a term sheet means we don't know what's going to happen. Um, so I would, if I was a founder, I used to celebrate, I got a term sheet. Nowadays, the only time I will let you even to think about celebrating is when you have a check in the bank,
Check in the bank.
right?
Great.
Because term sheets are being pulled literally every day. And not that I'm suggesting there's bad behavior, but there's always bad behavior. Because again, VCs and investors are also thinking about preserving their cash, or fixing their business model first.
Absolutely. Thank you very much. And what would be your advice to startups um, globally, like your last words to anybody?
So I think the thing to remember is there will be a morning after, right? The sun, when the sun's coming up every day, and for those of us who are still healthy, the world goes on, and hopefully that's true for everybody watching and their family. Um, but you do need to remember, even if you're doing cutting, is don't throw out the important things you're going to need when recovery does come.
Mm,
And if you happen to be one of those fortunate startups that you're in a market or segment that's actually doing well, now is the time to acquire assets you never could have gotten. And by assets, I mean, are there world-class people who are going to be on the street that you never could have hired? I would grab those now, because you'll never get them again. Are there physical assets, equipment, or buildings or something that, if you have the cash and resources because your segment is doing great, pick them up, because you'll never be able to get them. And for the rest of startups who are struggling to figure out how to survive, keep your eye on the price. Um, this will end. You just need to survive long enough so it does. And my generic advice for all startups is, whatever you do, you need to move with speed and urgency, not panic, but speed and urgency with a plan. Make
mm,
an assessment of what's going on outside, make an internal assessment of burn rate and cash flow, and um, and then think about what kind of business model pivots you can make, but then decide to take action now. Because if you don't take action, the marketplace is going to take action for you.
Mm,
As a customer stop paying or investors stop funding. So that's what's great about founding CEOs. They're almost always great at assessing, orienting, observing, deciding, and act at a rapid speed. That's what differentiates them from corporate execs. This is the time to operate like you're in a startup. So remember, the sun will come up, and hopefully, we'll see everybody on the other side.
great. Thank you. Thank you very much, Stephen. Thank you very much for chatting with us at Startup Grind Cape Town and Startup Circles. It's really amazing for us to have somebody of your caliber speaking to us here. So we really
Well,
appreciate
it
it.
was great. Your questions were wonderful, and good luck to all the entrepreneurs and founders watching this. Take care.
Thank you. Thank you very much.